Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a business valuation expert in St. Louis, Missouri. I have the pleasure of interviewing Alina Rivera today. She is a CPA, a forensic accountant, and valuation expert in Puerto Rico. A lot of times it's just trying to face those issues and choose to face the hard ones, which is, what does this cash flow mean? Do I have enough for one day or 5 months or 5 years? And you're probably going to be in all different stages of that during the COVID business cycle. But let's just talk about the cash flow statement. Okay. You mentioned that, and it's part of this either as a cash flow forecast or things like that. But how does it help the owner in the operations of the company? Because I don't always see a lot of business owners creating a cash flow statement. They have the income statement, they have the balance sheet, but this cash flow statement, what is that really telling a business owner that they may need to pay attention to during this pandemic?
Actually, it can be different things, right? But going back to my distributor, my client that is a distributor, they have the revenues, they have the clients. So now they didn't have a forecast, a cash flow forecast. They have just business projections that the bank requested all the time, for the funding. So now they are dealing with, I'm bringing items or inventory from China. It takes 45 days. I don't have the money now, and they are asking me to have at least to pay 50% upfront. So that forecast, that cash flow forecast allows them to, okay, I'm going to put together this forecast. Now I know when I'm going to have this particular items that we are going to be selling. So it's intertwined with their inventory. I'm going to ask for this inventory. I need 50%. And that forecast that is divided in inflows and outflows is going to let them know which inflows they are going to be receiving, because this particular client of them, they know when they are going to be paying. So different to maybe professional services where you don't know where your client is going to be paying. In this particular case, their client pays in 30 days. So for them, it's easy to know when those inflows are coming and how to prepare to make sure that they can buy inventory and that you don't have a shortage of inventory. So that is an example in that particular distributor. But then you may have restaurants. And restaurant, they may not have a cash flow forecast. And in that particular industry, I think it is important the outflow part. Why? Because before you may not have didn't have a cash flow forecast, and you had maybe a huge space with the best internet for your clients. You were paying streaming, music streaming for your clients. You were doing all that. And when you prepare your cash flow forecast, you can go over all those expenses that when you have money, you don't care. You want your clients to be okay. But now, do you really need that? You may not need that. Why? Because you will prefer to have that money to pay your employees and to buy the food that you are preparing than having those expenses in a place that is empty now, because you're doing either carry on or people are picking up the food. And you may say, well, I have cable TV, I have a contract. Then that's the time to call them and negotiate. Do I have a contract? Yes. Can I put that contract in hold so I can stop having that bill during the next 3 months and then start again later? Or I don't have a contract. Can I cancel this? And then when things are good, then I go back and put in again. So those are the type of decisions, operational decisions, that you can have when you have a cash flow forecast, because or the most important part in some situation is, with a cash flow forecast, I need to decide, do I need to look for extra money? Because it doesn't matter that I have this cash flow forecast put together, that I have this savings, that I know when the clients are paid. There are some things that you cannot control. And I think that is important to say, because some of the clients, when you talk to them, they say, I don't know what's going to happen. There are so many things that I cannot control. And that is right. There are so many things that we cannot control, but there are other things that you can. So let's control those that you can control. And then the other things, you will deal with them later, right? But you need to be prepared. I think that's the important part. And that is why it's so important to check that cash flow forecast for your operations every week. It's not something that you're going to put together now and then it's going to be a 30 weeks and you're going to wait until the next month to look at it. No, I recommend my clients to look at it every week. Let's see what is happening. It was my forecast done correctly? I'm going to be having these clients? And then at some point, depending on your industry, if you are doing account receivables, right? Your client is not paying you. Maybe this is the time to call them because your forecast is gonna. You predicted that this inflow was coming this week, and you are seeing that your client that usually pays you doesn't pay you. Now, then now is the time to call them. What is happening? How can I assist you? Because yes, you are having issues, but you know what? Your client is going to remember you when they notice that you care about them.